Hi everyone, this is 2026 Mentorship Program Lecture 24. Now, in this lecture, I will be doing a market review on the dollar index. Now, this is a continuation of the previous lecture, which in the previous lecture, I talked about the dollar index. I gave you guys my personal perspective on what I'm currently anticipating price to do. I told you guys the parameters in between I'm looking for setup or what I'm looking at as a high probability setup and what I'm looking at as a low probability setup. It was explained for you guys to have a clear perspective going in and to understand price. Now, it have been around close to 2 weeks since I did the last lecture. So I wanted more information so that you guys can see what price did prior to the last lecture so that you can understand how to anticipate price and what are the reasons I pointed out a specific point of interest and what are the reasons I didn't have a clear perspective to whatever I was anticipating. Which in this video we're going through the dollar index so that I can show you guys how you can look at price, have a clear plan on how you can engage in price if price was to trade to your direction. On the weekly time frame on the dollar index, on the previous lecture, I talked about price running the buy side liquidity, which I explained why I'm anticipating a counter trend, which is a low probability setup to retrace to the weekly fair value gap. But at the same time, I told you guys to pay attention to the weekly inversion fair value gap. Now, looking at this price action, clearly you can see the price did not retrace to either of the point of interest before actually retracing, running out the buy side liquidity. Which I told you guys that there's a possibility of that through the daily time frame, which when I get to the daily time frame, I will be pointing out the specific reasons why price kept on trading higher in running out the buy side liquidity, even before retracing lower to the weekly fair value gap. On the previous week, price took out the previous week low, did not retrace lower to the weekly fair value gap, closed as an up close candle. Now, looking at this candle after taking out the previous week low, there's a possibility in price running at the high, and we can see the price traded higher on the previous week, took out the buy side liquidity. After running at the buy side liquidity, the retracement back into the price range. Now, this is still the recent swing low to the recent swing high. There might be a possibility of a continuation going higher or a retracement trading lower. Which once we get to the live trading section, which is going to be commencing next week. It's going to be live trading section going in next week, which more will be explained on the Telegram group. So if you haven't joined the Telegram group, the link is going to be in the description below. Daily time frame on the dollar index. On the recent lecture, I talked about the daily order block. I told you guys that even if price have traded through the daily fair value gap, there's still a possibility of price trading higher because price haven't traded below the mid range of the daily order block. The daily order block is still valid and price is currently at the daily order block. I told you guys that I'm not actually looking for a retracement trading lower to the weekly fair value gap, which I told you guys that this is still not a high probability in price trading lower to the weekly fair value gap because price haven't traded below the mid-range of the daily order block. There's still a possibility in price trading higher to run the buy side liquidity. Which on Monday, price traded lower, took out previous week low. Tuesday did a retracement back into Monday's range, forming a swing low. Wednesday traded higher, Thursday higher, Friday took out Monday's high, and the new week opening price, Monday took out the buy side liquidity, Tuesday retracements back into the range. Now within the swing low, the daily swing low and the daily swing high, where you can see that price retraced to the daily order block, traded below the mid-range of the daily order block, retracement, which I'm currently looking at this daily order block to see how price will be reacting to it. Now on Friday, I was anticipating a retracement lower from the other block. I was actually anticipating a retracement lower from the other block in price trading lower. But which price they traded, it wasn't. So I didn't take advantage of any trade with a live account because there was a lot of country on holiday, which the US did close the stock market a little bit early because it was Good Friday. So there was on holiday. So when it comes to price action, there's not much of a possibility of price trading to a bias. It's most likely going to end up as a consolidation day. And looking at what price did on Friday, most time price did consolidated, which was around close to the closing price of the stock market that there was an expansion lower around 8:30 to 9 a.m. Eastern Standard Time that there was an expansion higher on the dollar index, which I'll get to the 1 hour time frame and explain more on it. But that was the reason I wasn't looking for the setup, but my anticipation in price was to anticipate lower prices in price trading lower. I was looking to see if there's going to be a retracement trading lower, which going in next week, we might see a price action trading lower. For now, depending on how Friday candle did close, I'm not fully strong on the bias. I'm just going to look at what price did is going to be doing on Monday and on Tuesday. That's going to give me a full confirmation to where I'm actually going to be looking at price to trade to, which will be explained on the Telegram group and on the live section. You just need to be around to go through those content to have a full idea on what I'm actually anticipating going in next week. But talking about what price did last week and this week, not trading below the mid-range. We're expecting the daily fair value gap and the daily order block and running out the buy side liquidity. Remember, whenever you have a higher time frame bias and lower time frame trend is still aligned with the previous bias, just like in this example that the weekly time frame created a new swing high, and I told you guys that there might be a possible retracement trading lower to the weekly fair value gap. For it to be a high probability setup or a high probability anticipation of price trading lower is to see the lower time frame trend align with the idea. But the fact that the daily time frame still stays as an uptrend, there's still a chances of price trading higher to run the buy side liquidity, which I explained in the recent live trading section, which is the recent lecture. I explained on the possibility in price running at the buy side liquidity. 4 hour time frame, you can see the internal shift traded higher to a 4 hour order block, or expected the order block traded lower but failed to run at the swing low, did an internal shift retracement to a 4 hour fair value gap. Now, there's an entry. At this point, you can see that using the 4 hour as a perspective of a daily bias, you will be anticipating a continuation in price trading higher to run the swing high. That should be your draw on liquidity going in after the internal shift. Looking at price, whatever bias you have in price, always make sure to do a market review every day, depending on what you are actually anticipating, to see how price is trading to that idea so that you can easily pivot to what price is actually doing. It's very important to have a perspective in price, but at the same time, it's very important to understand when price is not actually trading to that perspective and there is another perspective in price that price is actually trading to, because price will always review its hands. If you were to look at price on a weekly basis, price will always review its hands going into going into the range between going into the range between Tuesday to Wednesday closing price, it will most likely review what price is actually doing for the week. Which in this example, looking at this price action on Monday, traded lower, took our previous week low. Tuesday, retracement to the 4-hour fair value gap. Wednesday, did the shift. Clearly, you will be anticipating higher prices, knowing the prices actually were expecting the daily or the block. You will be anticipating higher prices in price, trading higher to run Monday high as your first draw on liquidity. With opening to the new week, a continuation in that trend, trading higher to run the buy side liquidity. The reason I'm going into more details in understanding how to trade and how to day trade is because I'm going to be putting more time into day trading, but it's still aligned with the idea of a weekly expansion. I'm only looking for those intraday setups or looking for those short-term trades when I have a clear perspective on the higher time frame. Which the moment price took out the swing high, did the internal shift, we're expecting the daily order block on the 4-hour time frame. That gave me a clear perspective in anticipating a continuation in that trend in price trading higher to run the swing high, which I will be taking this trade live on my accounts, going in on the live sections, but understanding the perspective in price on how to have a clear perspective in price, have a personal anticipation on where you're actually anticipating price to go, but at the same time, do not stay fixed on that idea. Make sure you do your review so that you can actually see what price is actually doing. And remember that the banks and high institution use the daily time frame as their major time frame in looking for trades or looking on where to buy or sell from. So a daily point of interest is very strong in the perspective of how price will be respecting every individual point of interest. Always pay attention to a daily point of interest. A weekly point of interest, a daily point of interest will always give you a clear perspective in price. So those time frames are the time frame you have to spend most of your time in. Whenever both time frames are aligned, those are high probability setup. But whenever the weekly and the daily are not aligned, stick to the daily because it's most likely the price will use the daily to go for a short-term liquidity sweep before sticking to the weekly buys. So for a short-term liquidity sweep, is respecting a daily fair value gap in trading higher to run the buy side liquidity. So make sure you understand how to use every individual time frame correctly. Know what you're actually looking at on every individual time frame. Remember, daily point of interest are one of the highly respected point of interest in the dollar index. Now, I don't know about other currency like NQ. I don't normally trade NQ that much. So, but the daily is very important on major currencies. So stick to the daily time frame when it comes to your overall decision on what you will be doing on every individual day. But when it comes to every individual week, you stick to the weekly point of interest and to see if the daily will give you the right timing to anticipate a continuation or a reversal in price. On Monday, which is the which is currently this week, on Monday, price took out the buy side liquidity. Tuesday took out Monday's high to the retracement back to the range. Wednesday traded to the mid range of the daily order block, which I was anticipating a retracement in trading lower. The 1 hour time frame on the recent lecture, I talked about the daily order block. I talked about this daily order block. Sorry, I talked about this 1 hour order block. That if I'm going to be anticipating lower prices, I need to see price trade below the mid range of the order block. Which price did not trade below the mid range? That led to this continuation in price trading higher. Now, price did a retracement on Tuesday to the mid range, but at the same time, price did another internal shift on Tuesday, closing price leading to Wednesday. leading to its higher prices and price in running out the swing high. Thursday, retracement to the 4-hour fair value gap, a trend continuation. At this point, the 1 hour is already on an uptrend. You're just looking for areas to take advantage of, which should be an order block, a fair value gap, and your draw on liquidity is for price to run. If the price to run Monday's high, that should be your first draw on liquidity, which should be the swing high. Now, make sure you go through the 1 hour time frame, look at how you should have taken advantage of it on every individual time. We'll talk more on the dollar index once we get to next week, price action during those live trading section. I'm going to go through those specific reviews on where we will be actually looking at price doing going in the week. It's going to be more time spent in showing you guys how to actually apply the trading plan and how to use it correctly and when to be patient and when to actually look for those setups. So that's going to be all for this lecture because the whole purpose of this lecture is to explain on how price traded has around the buy side liquidity. Going on those individual setups is based on your own trading style. So if you are trader that are based on the weekly expansion, you know that the 1 hour time frame after the 4 hour shift is a clear indication of anticipating higher prices and running out the buy side liquidity. While if you are a day trader that takes advantage of the 5 minutes and the 15 minutes point of interest when prices were expecting a 1 hour point of interest, you know that as soon as price did a retracement to the 1 hour or the block, you will be anticipating a 5 minute continuation in trend, trading higher depending on the section. Now, this particular price action was around the New York section. I still remember the price action. I still remember the trade I took in price trading higher to run the swing high. The same goes to on Friday. This was still around the London section where I was looking for an internal continuation on the 15 minutes in price trading higher and running out the swing high. Remember, when you're looking at the lower time frame, we go into the lower time frame with the higher time frame perspective. So that's it for this lecture. See you guys in the next lecture.